Ladies and gentlemen, good day, and welcome to Refex Industries Limited Q4 and FY24 earnings conference call, hosted by Kirin Advisors. Please note that the duration of this call is 60 minutes. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni Chande from Kirin Advisors. Thank you, and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Refex Industries Limited. From management team, we have Mr. Anil Jain, Chairman and Managing Director, Mr. Dinesh Agarwal, Whole-Time Director and CFO. Now, I hand over the call to Mr. Anil Jain. Over to you, sir.
Thank you so much. Good afternoon, everyone. I would like to extend a warm welcome to all of you and thank you for joining us on this first earnings conference call of Refex Industries. Today, we'd like to intimate you about our performance in the recent quarter and provide insights into our strategic initiatives and future outlook. Before we delve into the numbers, let me take a moment to highlight our core business areas and recent developments. Refex Industries was incorporated in 2002 and headquartered in Chennai. It has established itself as a multifaceted company with a diverse portfolio including ash and coal handling, refrigerant gases, green mobility, and power trading. Our involvement and commitment to these sectors places us at the forefront of combating climate change and promoting sustainable development. Since our inception, we have been dedicated to refilling refrigerant gases that serve as replacements for harmful chlorofluorocarbons or CFCs and hydrochlorofluorocarbons or HCFCs. We have emerged as a leading supplier of environment-friendly hydrofluorocarbon or HFC refrigerant gases in India. These refrigerant gases are crucial in various applications, including refrigeration, air conditioning in residential, commercial, and automobile sectors, flame-blowing agents, and aerosol propellants. We pioneered the introduction of refrigerants in a disposable cans directly accessible to end users branded as Refex cans. We are currently operating of refilling facilities in Chennai, Tamil Nadu, and along with warehouses in Delhi and Mumbai. In 2018, we expanded into ash and coal handling business. Our assessment of this sector suggests that market size exceeds 25,000 crores annually nationally for ash handling alone. Traditionally, ash handling has been managed by unorganized sector in this country. In a short span, we have emerged as a major organized player in ash disposal sector, actively mitigating environmental pollution caused by generation of ash during coal combustion in thermal power plants. Utilizing advanced technologies, we ensure safe ash collection, transportation, and disposal with a strong emphasis on sustainability. We repurpose the ash generated for the construction of roads, highways, and embankments, as well as for filling mines and low-lying areas, thereby fostering sustainable infrastructure development. Our presence extends across key power generating states including Chhattisgarh, Maharashtra, Madhya Pradesh, Bihar, Orissa, Tamil Nadu, and Karnataka, establishing as the largest organized player in ash handling in the country. As on date, we manage 35,000 metric tons of ash on a daily basis with a plan to scale up to 60,000 metric tons daily disposal by year end, utilizing a combination of both owned and leased fleet vehicles. Presently, we operate a fleet of 800 vehicles, of which 39 are owned by Refex, and this number is set to expand to nearly 119 owned vehicles by the year end. As a part of our dedicated effort towards digital transformation, we prioritize harnessing technologies to boost operational efficiency and profitability, thereby fostering continuous value creation and expansion. At our headquarters in Chennai, we implement centralized data collection and analysis processes. To optimize our fleet management, we rely on centralized GPS tracking, partnering with reputable service providers like Loconav, Tata Fleet Edge, and iAlert. Through this innovative tracking system, we can closely monitor volumes, GPS location, and other vital metrics, positioning us as a pioneer in this field. In 2022, we ventured into power trading and obtained a Category 1 power trading license. Most recently, Refex Green Mobility Limited, a wholly owned subsidiary of Refex Industries, commenced operation of employee transportation using electric vehicles in Bengaluru in March 23 and Chennai thereafter. RGML provides bundled offerings that include electric vehicles, trained and background verified drivers, a sophisticated technology platform that helps employees book their pickup and drop on time. We provide these services under the brand name Refex e-Wheels to corporate customers like software companies, large banks, and companies who are into back office services with large employees on roll. As of yesterday, our fleet has run 73 lakh e-kilometers, and in the process it has abated approximately 4.38 lakh kilograms of CO2, showcasing our commitment to reducing carbon emissions. We are also committed to help our customers achieve their ESG goals. I'm happy to share some of our recent developments that highlight our progress and strategic initiatives. Our step-down subsidiary in the green mobility vertical, along with employee transportation, has commenced operation at Bengaluru Airport as a preferred airport taxi, where we'll be operating 660 electric vehicles at the taxi pickup bay. This marks a significant milestone in our green mobility efforts, where we'll cater to B2C customers. Additionally, we are expanding geographically and increasing our fleet size, forging collaborative sustainability initiatives that align with our commitment to reducing carbon emissions. We plan to start operations in Pune and Hyderabad by September 2024. We are currently operating 479 vehicles for this business and plan to grow up to 2,000 by end of this year. Our order book for other business also remain robust, with the ash and coal handling segment totaling about 1,000 crores and power trading segment at around 500 crores as of 24 May 2024. Bolstered by a strong presence in ash and coal handling and power trading, alongside our expanding footprint in the refrigerant gas vertical and advancing operation in green mobility, we are poised for sustainable growth. Coming to our financial performance. For the fourth quarter ended FY24, we reported robust standalone financial results, highlighting the success of our strategic initiative and operational efficiencies. Our total income for Q4 24 was 345.7 crores, contributing to an annual total income of 1,388.84 crores. This growth underscores the effectiveness of our diversified business portfolio. Our EBITDA for Q4 24 was 43.50 crores with an EBITDA margin of 12.89%, while the annual EBITDA amounted to 148.75 crores with a margin of 10.85%. Our quarterly PAT was at 35.76 crores, resulting in a PAT margin of 10.34%, and for the full fiscal year, PAT reached 100.95 crores with a PAT margin of 7.27%. These results translated into an EPS of 3.23 for Q4 and 9.12 for FY24. The improvement in PAT and EPS demonstrates our strong bottom line performance and commitment to creating shareholder value. Our standalone revenue composition for FY24 was as follows: ash and coal handling at 945.58 crores, power trading at 280.9, refrigerant gas at 72.31 crores, sale of other services at 55.64, solar power at 10.36, and others at 5.77 crores. On a consolidated basis, our total income for Q4 24 was 350.31 crores, culminating into an annual income of 1401.13 crores. Our consolidated EBITDA for Q4 24 was at 41.25 crores, representing an EBITDA margin of 12.05%, and the annual EBITDA at 146.1 with a margin of 10.57%. Highlighting our consistent operational efficiencies across all business segments, our consolidated PAT for the fourth quarter was 33.37 crores with a PAT margin of 9.53, while the annual PAT reached 92.98 crores, reflecting a PAT margin of 6.64%. The consolidated EPS was 3.02 for Q4 and 8.40 for the full year. These figures illustrate our comprehensive growth and profitability even as we navigate through dynamic market conditions. The main factor contributing to the decrease in our revenue stems from a significant drop in coal prices in the current year, which plunged by approximately 45% compared to the previous year. This sharp decline has directly impacted our top-line figures. While the prices have plunged, we have ensured that the volume was always the same, and we have increased our coal handling volume by 3,138 metric tons this year. Despite facing adverse market conditions, our proactive measures have allowed us to maintain stable EBITDA margins. We have seen a remarkable growth of 112 basis points in EBITDA margins and 236 basis points in PAT margin from Q4 FY23 to Q4 FY24. This highlights our ability to adapt to evolving market dynamics and optimize operational efficiencies effectively. Our focus on enhancing coal handling capabilities and prudent cost management has allowed us to mitigate the impact of declining coal prices on an overall financial performance. The financial performance of both our standalone and consolidated operations indicate a solid foundation and a positive trajectory for Refex Industries. We firmly believe that aligning economic prosperity with environmental stewardship creates lasting value. As we continue on this path of sustainable growth, we remain steadfast in our commitment to making a meaningful difference in the fight against climate change and fostering a greener, more sustainable future for generations to come. Our strategic focus on sustainable and diversified business practices, coupled with technological advancements and operational efficiencies, has contributed to these impressive financial outcomes. We remain committed to driving further growth and delivering consistent value for our shareholders. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yashwanti from Cogent Fin. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, going through your research, we've seen that your revenue has been dropped as compared from FY23 to FY24, and mainly from your coal and ash handling business, which is a major contributor. Even the decline has been seen there. So one thing I just wanted to understand from you is what is the reason for this same? And you had combined the coal and ash handling. So if you can give on a volume and price as data for both the business individually now, even going forward, if you can include this data in your presentation going forward. Thank you so much.
Yeah. To answer this question, the drop in revenue was mainly due to the fall in coal prices by almost about 5,198 per metric ton on an average in the year. While the quantity has increased by 3,137 metric tons, the prices have fallen. That's why there's a fall in revenue. Second, yes, the reason why the coal and ash handling has been combined because the logistics used for coal and ash is almost common logistics. That's why this has been combined. But yes, we will try and see if we can split from the next time and share this data with
even if you can just give on the volume wise, what was the ash handle and what was the coal handle, that can also help us understand where the things is coming forward or what has gone.
So approximately, we have handled about 1 million ton of coal and about 60 lakh tons of ash.
So that is your average capacity for the year.
Sorry.
That is your capacity whole year, right?
That's the commodity handle. Coal handle through the year is 1 million ton, and ash was about 60 lakh ton for the year.
Okay. And so, in one of your concall and one of your communications with the investor, you also mentioned that there is a lot of...
Your voice is not clear. Can you please try and speak inside the handset?
Yeah, it's in handset only. Am I clear now?
Yeah, it's better now.
Yeah. So you were also talking about there was a lot of a dump ash has been has been put it in a pond over the years when the regulations were not strict or maybe the users were not ascertained a couple of years back. So what is the quantum you can guess? So what is the quantum which is lying in that pond as a dump ash, and what you as a company or what as a government are taking the initiative to clear that, as again it is a hazardous for the environment?
Yeah, to be very honest, this data is not available across the thermal power plants in the country, but all the thermal power plants have created ponds within the thermal power plant where when the fly ash does not get disposed in an environmentally safe manner, they put this fly ash into pond for disposal in a future date. So there could be millions of tons of pond ash lying in ponds in thermal power plants, but there's no data which is available.
Okay. And so, is there any other company, maybe organized or maybe not listed one, who is also in the same business?
Most of this business is by unorganized sector. Our closest competitor would be a company by name Ashtec Technology Private.
Okay. Okay. And coming down to your mobility business, so can you just guide us more on your mobility business? We acquired the business on the OT.
Sorry, your voice is again going feeble. Can you be a little loud, please?
Yeah, I just wanted to understand more on your green mobility services, where we are giving couple of services, pick up and drop services for a couple of corporates, and you were also mentioning in your opening remark, and this we have started with the Bangalore airport. So can you just give us the outline or the business prospect for this line of a business?
Yeah. So if you look at the employee transportation using electric vehicles, when most of these corporates want to fulfill the ESG compliance or the Scope 3 ESG, they will all have to shift from ICE vehicles to electric vehicles over a period of time. And today we are providing these services. So the market for this also is very huge. Every large corporate software or a banking or a back office company provides transportation of their employees from their house to office. So this market is potentially going to grow. The electric vehicle market is going to grow a lot. And on the Bangalore airport, we acquired a company which had won a tender for providing airport taxis for Bangalore airport. So the number of vehicles which are going to be deployed there is about 660 vehicles, of which we have already started deploying some of these vehicles, and by end of July we would have deployed all the 660 vehicles there. And that's more for B2C, where the passenger coming out of the airport, this is the first lane outside the airport where they can book this airport taxi.
Okay. So we are providing B2B to the corporate and B2C for the Bangalore, and this will happen to the acquisition. So when we acquired a company for this Bangalore taxi services, what was the fleet acquired by us from them?
Zero. It was a tender which they had won, and they were not able to execute. So we acquired this to execute this project.
Okay. So have we paid anything to them?
No.
Okay. So considering this Bangalore taxi services and considering this corporate taxi and the corporate mobility services, what would be your total fleet size as on date?
The total fleet currently is about 479 for the electric vehicles, which are operational both at Bangalore airport and the corporate customers.
Okay. And they are all owned by us, or it is on a own and operate on a by the driver model?
No. Currently, most of them are owned by us. We have about
Hello?
so roughly about, can you hear us? Roughly about 70% is on the books of the company, the vehicle, and 30% is on the lease.
Okay. And what is your plan increase in the fleet size for current year or maybe even for FY26?
So current year, we are trying to reach 2,000 vehicles by March 2025. And our internal target to reach 5,000 vehicles is by March 2027.
And that will be completely owned, or it is an owned and operated by the driver model also?
Leased and owned vehicles together.
Both together. And so what is our fleet size in the ash handling business?
Sorry, your voice is feeble again. Can you repeat?
What is the fleet size in the ash handling business?
Currently, we are having 800 vehicles in ash, of which 39 is owned by us, and we plan to add about 119 in the current year.
Okay. So can you also help us understand how the fleet structure happens as from the ash handling business? Is the power company pay us, or the suppliers to whom we supply ash, they pay us?
Mix. That depend on the state to state. This is Dinesh Agarwal. That depend on the state to state. Few states there is a surplus of ash where our company pays. There is in India few states there is a shortage and demand is high, where the customer pays us. I mean, or the consumer who is using the ash, they pay. In an overall scenario, all over India, largely our plant pays us for the disposal.
Oh, so that is the traveling charge, the transportation charges is paid by us.
Yes. We not only do the logistic transport charges, we do certain value additions on the compliances, permissions, and certain technology we have deployed, and we charge over and above the only transportation charges.
So if the way we are helping government, we are helping environment from the sustainability perspective, taking the hazardous material out from the industry. So, in that case, do we get any kind of a subsidy, any kind of a credit, or like any kind of a carbon credit kind of a thing by doing this both this business? One is the tax funding, and as well as having a fleet in the EV side.
Yeah. So currently we are not doing that, but yes, there is a scope of, because there is a carbon abatement which is being done, CO2 abatement. So there is a scope of that also, which we'll look at the next year.
Yeah, because that I can see that the quantum of the carbon abated done by us by using in this fleet side. So we can expect some kind of a revenue going forward. That is what you wanted to guide us?
Not in the current year, but maybe next year.
Yeah. Thank you so much for your explanation, sir. I'll join back in queue.
Oh, sure.
Thank you. The next question is from the line of Ankit Nerkar from SEBI Registered Research Analyst. Please go ahead.
Hello.
Hello.
Yes, sir, you're audible.
Yeah. This is Ankit Nerkar here. I'm a Federal Registered Research
Sorry to
Analyst.
interrupt you, sir. May I request you to please use your handset?
Yes. Can you hear me?
Yes, sir. Please continue.
Yeah. So I have a question pertaining to the investment done in RKG Fund 1. This was in 2021. Could you share some details about that investment?
RKG fund is an alternate investment fund, category 2 fund, and they specialize in investing into stress assets, and we have invested into that fund for a better return.
Could you give me some details about how could this fund be otherwise invested in your green mobility or any other business in order to grow the business in the first place? I mean, what was the rationale behind investing in the fund?
This investment was done 3 years back, much before the green mobility business. And this is looking into, we have seen this, and we see a better return compared to any other investment, and that is the reason we have invested.
All right. Is there any maturity to this investment?
There is no maturity period, but we expect this to get liquidated over the next 18 months.
Oh, sorry, over the next?
18 months.
All right, 18 months. The other question I have is the profitability margin on the ash handling business. Could you share some details related to that?
Profitability in coal and ash handling business is close to 12% net profit, and that is
Hello. Yeah. Yeah. My question is that segregating the coal business and the ash business in terms of value.
which coal and ash business is, as Anil has already answered this question in the previous one, that this is both are interrelated and where interdependent logistics are there, and that's the only reason we are keeping it as one business, one identifiable segment.
One identity.
Like I said, maybe going forward we will try and split that, because most of the logistics are cross-utilized between both the segments. So that's why splitting the profitability is very difficult. But going forward, we'll try and put a value to both of that and try and share that.
All right. Thank you. Could you give some revenue guidance for next year for this ongoing financial year for the coal and ash handling business?
We expect a better growth this year compared to the last year. We are growing at a CAGR of 30% in this segment, 30 to 40% in this segment, and we expect to repeat in coming 2 to 3 years the same CAGR.
All right. Thank you. These are the only questions I wanted to ask.
You're welcome, sir.
Thank you. The next question is from the line of Vijay Chavan from NCHP. Please go ahead. Mr. Vijay, can you
Hello.
unmute your line? Yes, sir, you're audible now.
Yeah, thank you. So, good afternoon. So actually, my question is, what is the capacity of refilling of gases, supplies of gases, arrangements for refilling, revenues and margin from this segment?
The current capacity is 3,000 metric tons per annum, and the total market size of refrigerant gases is about close to 1,000 to 1,200 crores across the country. And we don't see a large growth in this sector as such in the coming years, because the whole market itself is very, I mean, compared to the total overall revenue which the company will be doing, the percentage will be very, very less.
Okay, sir. So, can you elaborate more on coal trading and power trading businesses?
On the power trading, currently what we do is we are a licensed power trading from, we have a category 1 power trading license from CRC, by which any generator or a consumer of power or a discom will have to buy and sell short-term power through this trading license. So currently we've been doing some banking transaction for these discoms. We work with various discoms for this power trading, and we're also working with some of the generators to see if we can book some capacities for bidding or selling during the short-term power requirements for various discoms. And on the coal, we've already explained that it's a trading business where we supply coal to some of the discoms and thermal power plants in the country. The reason for that is more of doing both coal and ash handling in the similar in the same company.
Okay. Thank you, sir.
Welcome.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Jignesh Dayal from Jiva Capital. Please go ahead.
Hello.
Yes, sir, you're audible.
Hello. Yes, sir.
So I wanted to understand, like, we have different segments. So what kind of vision the company has in the next 3 to 4 years? How our revenue will be reflecting division-wise, percentage-wise, if you can throw some light.
Yeah. So if you look at the businesses except refrigerant gases, most of the businesses are linked to the logistics. The ash handling is also an advanced logistic business. The e-mobility is also advanced logistic business using electric vehicles. And coal trading is more of a business where we're able to cross-utilize the logistics for ash. So going forward, we see refrigerant business growing at about 10 to 12% CAGR, and the ash handling and coal handling roughly about 30 to 40% CAGR. EVs, like we said, we are looking at almost about 5,000 electric vehicles by 2027.
Okay. So, and what about the power trading?
Power trading currently is more a licensed business, so it's more depending on government tenders for banking and trading of power. So, very difficult to give an outlook for this currently, because these are just started to maturing now.
Okay. And what kind of coal and ash handling, or what kind of past years profitability have we seen? So is it constant, or there is lot of variation every year?
It is constant. It is only, I think we'll only be growing the profitability because of our more knowledge and deeper understanding of the business as we proceed forward, and use of more technology towards tracking of vehicles and better utilization of ash disposal. So we might see a little bit of bump in the profit, in the percentage of profit going forward.
Okay. Thank you.
Thank you. The next question is from the line of Pranay Jain from the Deal Wealth. Please go ahead.
Yes, my question is with regards to the trends that we are seeing near term. Is this generally a period of good seasonality, or we are seeing that things will only pick up from Q2 onwards overall across our segments?
Till about last year, I would say a lot was seasonal dependent, but I think with the diverse business which we are doing in various segments, I think we're trying to mitigate that by ensuring more businesses happen which are not season dependent. And we see that refrigerant gases will always be seasonal because most of the demand comes during summer. And in ash handling, there could be a little bit drop during the rain season when there are heavy rains in some of the states. But by expanding our work in various different states, I think we would be able to mitigate that seasonal risk.
So as we expand our footprint and utilize our capacities better, is there anything that you can guide for the next 1 or 2 years in terms of how the scale-up is going to look on top line and bottom line?
Yeah, on the numbers, we can't comment the numbers, but like we did say that the ash and coal handling will grow at 30 to 40% CAGR, refrigerant roughly about 10 to 12% CAGR, and on the EV business, we think we'll reach about 5,000 vehicles by end of 2027.
Okay, and anything on the return ratios or margins that we are aiming?
Yeah, like I said, the margin currently, the EBITDA numbers will definitely get better from 12.5. Like earlier, the 22-23 was about 10.04, 23-24 is about 12.77. I think it should go a little bit better, and maybe we might have a few basis points higher in the current year with our efficiencies and learning of the industry.
All right. And lastly, anything as a tailwind we are expecting on the policy front, or things are as good as they get presently?
No, things are good. We don't see any change in the policy.
All right. Thank you so much, and all the best.
Is going to be which everybody is going to talk about, so I think will always be good.
All right. Thank you so much, and all the best.
Most welcome. Thank you.
Thank you. The next question is from the line of Nishant Sharma from Nuvama Wealth Research. Please go ahead.
Thank you, sir. Thank you for the opportunity. Just one question, kind of question from my side. One on the coal and ash handling. When you say the growth of 30 to 40%, this will be volume-led growth, right?
Yeah, volume-led growth. We see that the prices are sustained now, and at these prices, we don't see a big changes in the prices. In the ash handling, the contracts are more so increase in prices only. Coal, we don't see a large difference in the prices from current prices. I think they already bottomed out.
Okay, and if I look at the segmental margin from last year to this year, like on coal and ash handling, then last year we had done about 1,300 odd crore of sales and about 130 crore kind of a EBIT. The same number, if I look at this year, over 945 crore of top line in coal and ash, we had done around 121. So margins have expanded despite a correction in the prices. So is there any change from a contract point of view, or this is purely led by the what we call the operational efficiency or the mix change that has helped for the margin expansion?
That's majorly because of product mix, this one. Previous year, the coal part was more, the 2023, and the ash was less. And this 24, where the ash segment is more, and coal is reduced. The coal, this is again because of product mix, one of the major contributions. And again, the learning, which we are increasing our efficiency, we are correcting much more, increasing the efficiency. That is all. Various other reasons. These are the two primary.
So then, how do we decide whether we should go for more on coal or more for ash?
So the group's vision is also to move a lot more towards ash. Like I said, coal was more so because of cross-utilization of logistics, the trading of coal. But our focus is going to be more on ash because that's where we see large margin growth for the company. And also volume-wise, like I said, the current market for ash handling is upwards of 25,000 crores, which is completely unorganized. So the whole market opens up for us to look at our growth.
And how do we differentiate from, say, unorganized to organized? Why one would go towards organized? Possibly because we will be charging a little bit higher compared to unorganized? Or what are the modes that we see that a company should come towards company like us or a customer should come to us?
What has happened over the years is most of this ash disposal has been through unorganized sector, and there's been no tracking of these ash where it is being disposed. What we bring on table to large companies and large corporates like NTPC, etc., is we bring a lot of tech on the table. Like we have a complete monitoring of vehicles, including using GPS. Every vehicle which is loaded is measured, how much of ash is loaded, where it is disposed, how much is disposed, and all this data is given back to NTPC, and for them they need to file it back with the Environment Ministry. So this is what we bring an advantage, and obviously being a more organized player, we provide processes and systems through which there are minimum accidents, minimum casualties in all this transportation because they involve large trucks, etc. Safety and health is one thing which we always insist and take care of. I think these are all the major reasons why we've been working with them.
When we say dumping, where do we dump this ash? I mean, as one or the other cement companies take the ash as a raw material, if I'm not wrong.
So there are multiple ways they're disposing these ash. One is like you said, cement companies are the major consumers of ash. The second is for highway construction, road construction, embankments on highways, mine filling, etc. These are all the various uses. Depending on the location of the thermal power plant and the amount of ash generated, it gets split into any of these disposal avenue, depending on what is happening around the power plant. Some of this ash also goes for brick making, which is a very small volume.
Right. So here we make money from NTPC giving us for disposing of ash, or we get money from selling this ash to, say, a cement company like Ultratech.
So it's a very interesting thing. Like we answered this question earlier, it's a very demand supply driven business. Sometimes we also get paid from both the sides, cement companies and thermal power plants. Sometimes it is only the thermal power plants which pays us money for transporting. Cement companies don't pay. So it's a very variable market depending on the location and the demand and supply. There's no fixed rule for this anywhere in the country.
And is there, do we have order visibility for this business wherein we get the 1 year order visibility in advance, or is there a contract, or is there a tender which they run it and then we have to file those tenders and then only we get to know what kind of numbers that we can achieve in the next year?
Private companies have a 1 to 3 year contract, and even the tenders which come from NTPC and public sector are between 1 to 3 year contract. It could be, most of them are 1 year contract, but some of them are even little longer contracts. So with this current, our order book is about 1,000 crores of coal and ash handling as of last weekend.
And this 1,000 crore would be executed in what time frame?
Will be executing the current financial year.
So generally, when we say, is there a possibility to achieve more than 1,000 crore, or this is the more of visibility that we have? During the year, we get more orders or something like that?
Yeah, 100%. This is just the order book as of today, and there are much more visibility which we see over the next few months. Every month now, there are a lot of tenders coming up, and we're also targeting new states, new customers. So this is just the order book based on last weekend, and it's tend to grow much larger than this.
Moving on to the next one, on the, say, power trading, we mentioned that 500 crore kind of a order book we have over there. Am I right in that?
Yeah, you're right. Currently, we have tied up with a generator for close to about 500 odd crores of commitment of power from him, which we have in the forward also put in some tenders with some of the discounts, which we have currently won those. That is also over the period of year. And again, here also this is the order as of today, and there's a potential of growing here also, some more business to grow in this segment also.
But if I again compare it with the last year to this year, though we have over 100 crore of incremental revenue, but the margins were almost flat, or rather in terms of percentage it has declined. So what's the visibility that we see, even if we do a 500 crore kind of a revenue in power trading, our margins would be much better over there, or will there be absolute numbers will go up?
So I'll tell you, power trading, because it's a licensed play and it's a commodity, the margins are very, very thin. I think the margins could be less than like a percentage in all of these. It is just the volume which could add up. And these are again, all of these are because we are just trying to get into maximum services with the power plant. We are trying to see how we can utilize the power under our power trading license, take care of the ash handling, take care of the coal requirement and coal handling. All these services, we're just trying to see how we can consolidate into one power plant.
Okay. And does this make sense? I mean, refrigerating gas, again, the top line was higher, but we incurred a loss in this year. And even as you mentioned that the growth is like 10 to 12% only. So a loss-making business, maybe this year might be a one-off, but growing 10-12%, will that make sense? Or is there any significance or a synergy that we can get from this business, refrigerating gas, for the other businesses?
So in this current year, there's a loss mostly because of the very frequent price fluctuation, and there's a 5% additional duty which was imposed by the customs. So that was a one-time absorption of loss, I would say. But now it is being passed on to the customer. Going forward, we will not have this loss, and the growth about 10-12% is a very reasonably achievable number in this business. Similarly, the profit margins also will be upward of 6-7% as previous years.
Oh, okay, last question for this, and maybe I'll fall back into there would be other participants also. There's one more segment which is saying sale of services where we have considerable revenue. What is this? And the margins are also very high in that segment. What does this include?
Sale of services, it is again a complementary business to ash handling. That's not a focus for us. That's opportunity based. Whichever the plant we work, if we are getting an opportunity which is helping us to get into the plant, sometimes we undertake to take that project. So current year, whatever done in the last year is going to continue. This is more of a operations and maintenance service for various power plant in India.
Okay, fine. I'll fall back if you have more some questions. I'll fall back with you. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Vignesh Dayal from Jiva Capital. Please go ahead.
Yeah, sir, as you mentioned that you're giving a lot of services to thermal power plants and trying to get a lot of bouquet of services. But on the other hand, if we have contracts in ash handling with power plants, can we not have kind of confirmed orders from long term from cement companies also? Because they would also like to deal with organized players.
Yeah, that is also work in progress. Some of the cement companies do have long-term contracts with us. But going forward, like while we tie up for the ash with the thermal power plants, we'll also go tie up with cement companies for long-term contracts. Yeah.
Okay. So is this a new system in the industry, or it has been happening, this kind of long-term contracts?
Some of the most of them were a yearly contract. We have been trying to see if this could be 3 or 5 years contract.
Okay.
Some of the unorganized players have been doing a spot business, I would say. Whichever unorganized player would put maximum number of vehicles, he would take the ash and go from there. It was never, most of the private players are still operating like this. It's only the last few years, last 2-3 years is when the public sectors have moved to organize tenders and then process by which they want to give out these contracts.
Okay. So maybe we can take from government power companies and give it to big cement players.
It will again depend on cement player's location. If a cement player is very far from a government company, we cannot give him. He has to be located near a thermal power plant. Most of the cement companies in the past have been set up near the private power plants, more so because they thought it was easier to get ash from private players than government. So it's a viability. It's always a question of viability whether ash from a thermal power plant will be viable or not. So we take it as we get these contracts, we then based on that go backwards and work with either cement companies, roads, highways, embankments, wherever the best utilization could happen at the lowest cost for us, we could go back and do that.
Okay. And in the last couple of years, out of total ash handling, the top three cement companies would have taken how much of the total ash that we have handled in terms of percentage?
Cement companies in terms of percentage?
And ash handling.
See, I think roughly if you see, just to give some numbers, Gujarat Ambuja does about 5,000 tons a day with us, and Ultratech does about 3,000 tons, roughly about 8,000 tons. Out of our 35,000 tons being handled, about 25% is going to cement companies.
Oh, okay. Right. Thank you.
Thank you. The next question is from the line of Vidya Shankar, who is an individual investor. Please go ahead.
Good afternoon, gentlemen. I'm very happy that during the last AGM when we proposed to Anil sir for the it was disposed much before the next AGM. My questions are pertaining to the Mission 2025 and Vision 2030. If we can have some kind of a statements in this regards, it will really help us understand the overall direction of the management. And secondly, since we are getting into multiple revenue thrust areas, as a seasoned investor and risk assessment, what is the risk of this deviation from our core competency in terms of coal ash and refrigerating gas?
Thank you, sir. Thank you for this question. On the vision statement, it is very difficult to make statement today, but I'll definitely think that before the next call, I will make two strong statements for all.
Yes, it will be an ongoing exercise, but if we can have it before the AGM, I think it will be.
Yeah, we'll do that for sure. And currently on this, the question which you asked, if you see, like I said, even the electric vehicle business is more of a logistics business. We are only looking at the logistics in a very large, sustainable way, where we are trying to see bringing our skills of managing the drivers, vehicles, bringing technology to the vehicles, bringing complete monitoring using a strong back office. I think these are all the strengths we bring into the business. So shift from coal and ash handling to an electric vehicle is not a large diverse. It is just the product or the end customer changes, but the process is very, very similar. And I think today, the way India is growing, the country is growing, every large organization will want to work in a very system-driven and a process-driven manner for any of their activities, even more so from the sustainability and the ESG compliance side. So I think we will only be contributing to that, and for us, getting into these various areas of logistics is mitigating risk of revenue from one of the sector itself. Like just for information, a few years back, everybody was saying that thermal power plant is not a great place or business to work, lenders would not fund. But then the whole thing changed over the period of time. So it's more so to mitigate risk, we are getting into various of these activities which are similar in nature, I would say.
True. Just like we look at diversification within our portfolio, the overall portfolio as from a company's long-term standpoint, you would also like to have a little more diversification instead of being independent.
Thank you, sir. Thank you so much.
Yeah, thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Nishant Sharma from Nuvama Wealth Research. Please go ahead.
Thank you for the opportunity again. My next question was around the EV fleet size that we have. So you're
not audible. Sir, you're not audible, sir. Sorry.
Am I audible now?
Yeah, it's better now, sir.
Yeah, thank you. So my next question is around EV segment, where we have two categories, if I have to classify them. One is a B2B, where we are providing services to the large corporates for their employees from office to home services. So that would be more like a short-term or a long-term contract. What is the fleet size over there?
Just to give you an example, like Bangalore Airport Taxi, that is B2C, is about 176 vehicles. The other two, Bangalore Corporate Employee Transport is about 196 cars, and in Chennai, Employee Transportation is about 107 cars. These are B2B businesses. So the B2B contracts are generally long-term contracts, anywhere between 1 to 3 years contract. Large software companies, large companies are looking at a 3-year contract, and they are more advantage and beneficial for us also.
Right. So now getting into B2C airport taxi, because that would be more dependent on the traffic and as well as on the pricing side. And there, the 660 target that you mentioned is only for the airport taxi that we are catering, or the across all three segments that you just mentioned, that is the target?
No, so it is only the airport taxi. The tender which had come out from the Bangalore International Airport Limited Company was to deploy 660 vehicles. They already were having ICE vehicle, the diesel engine vehicle for their airport taxi, which was using the first lane. They had about 660 vehicles over there. And the utilization of all these vehicles are on an average about 1.5 to 1.7 trips per day. This is based on the data available from the Bangalore taxi in the past 2 years. And we only see the airport passenger traffic is only increasing with the new terminals. So I think 660 vehicles will be fully utilized for B2C. And the tariffs for these are all, in Bangalore, the government comes out with tariffs. These tariffs are all fixed by governments. So whether it is any other company also will have to work within the same highest tariff given by the authority. The advantage what we have is our taxis will be in the first lane. And as soon as the passenger comes out, the first vehicle he sees is the airport taxis of the Bangalore airport, which is currently deployed by us. So the advantage of us getting a business is much more than anybody else who's in a row 4 or row 5.
Okay, it's not the prepaid taxi that we generally book it from the airport. That is not, it's just directly you can enter and decide on that.
Yeah, you can enter and decide. And this are again, most of this are again technology driven. We have an app which you can also download and pre-book if you want when you come to Bangalore airport, similar to your other fleet services which you use. It can be pre-booked, it can be booked on the spot, or it can be booked through the app also, or at the counter at the airport also.
So it's a revenue share with the driver, or the entire income and saving and the drivers are mostly on salary?
Currently, we are working on both the models, where we are also having some drivers on salaries and some we are also working on revenue share. We're just trying to see whichever works the best for us. We're trying to ensure that the yield, when you give a revenue share to the driver, the yield, the higher revenue, there's more potential to generate more revenue because he gets a better share. So we're working on both the models currently.
Okay, and last question from my side is on the CapEx requirement. As we are mostly focusing on expanding capacity across our business verticals, so what will be the CapEx requirements, say maybe each of the vertical or at a consolidated level, and how are we planning to fund those capital requirements?
Yeah, so the total CapEx requirement for the current year, I would say, is roughly about 55 crores. In the 55 crores will be for all the businesses put together.
Majorly will be bank funded.
Yeah, most of it will be bank funded.
Very less capital intensive business.
Okay, and so we have the names. Sorry, go ahead, sir.
This is for the holding company, and for the subsidiary for the electric vehicle which we're talking about. When we talk about 2,000 vehicle in the current year, we're talking roughly about 130 crores of CapEx requirement there also.
Okay, and that will also be bank funded.
Yes, please.
Okay, even in the holding company, the requirement will be more for increasing the fleet size in ash and coal handling system, right?
42 crores out of the 55 is going to go for the fleet size increase. 5 crores is for refrigerants, and another 6.5 crores is for other corporate CapEx.
Okay, 43 plus 5 plus 5.
5 plus 6. 42.66 plus 5 plus 6.55.
Okay, and there is one more company, Refex Renewables. So are we going to have any comments on this call, or we have a separate call for that?
That we'll have a separate call, please.
Oh, okay, fine. Thank you. I'll call back and give once again. Thank you very much.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Ms. Chandni Channe from Kirin Advisors for closing comments.
Thank you. Thank you everyone for joining the conference call of Refex Industries Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
On behalf
Thank you, everyone.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.